Hello everyone and welcome to The Week in Markets. So I'm Chris Leyland, I'm Director of Investment Strategy here at True Potential. I'm delighted to be joined by Kevin Kidney, Investment Director. So let's really just dig into what's been happening this week. And actually quite a positive week when we think around equity markets, particularly in the US.
Yes, and I think the key driver of that is growth surprises. So we know we had a strong GDP print for the end of 2023 for the fourth quarter as a whole that came in above expectations, confirming that the US for the calendar year of 2023 grew at around 3%. Early indications for this quarter are similar, that the growth momentum there is continuing and is above trend. And another key driver is positive jobs data. So we are seeing continued above trend jobs creation, other indicators pointing to robust expectations for hiring intentions ahead. And the equity market is capturing all of this, particularly in the US. And we're seeing, strong earnings from some key names.
Excellent. And one thing that we've talked about with clients, with advisors is inflation.
Yep.
And it feels like we're in a better place maybe compared to where we have been previously in respect of inflation.
Very much so. So we had another downside inflation surprise for the month of December in the US. So calendar year inflation in the US for 2023 came in below 3%. That's important because it was lower than the Federal Reserve had expected. It's really ratified their indication that rate cuts may be ahead. We know that inflation will decline further, and we know that places like the UK will begin to catch down to where the US is, which is constructive, as base effects begin to unwind, but also lower energy prices, for instance, in the UK, will begin to kick in from the spring. And also we should actually see some very low inflation prints in Europe in the spring. We may even see inflation below 2% there briefly. And that is a positive so far for equity markets because employment is so high. It's helping to generate aggregate demand. So it's all constructive, particularly for the US, given corporate America is so dominant in the global landscape.
Excellent. And we talked a little bit around equity market strength. So what you're seeing is investors are willing to go into the stock market, are willing to buy equities. Do you think you're seeing maybe a little bit more nervousness around holding so much cash compared to what we've seen previously?
I would say that December probably forced a lot of people to consider the balance of risks in their portfolios, particularly if they're overinvested in cash. The fact that interest rates will decline this year will reduce the interest rate on those cash balances as well, and it makes it less attractive, I would say, because given inflation is declining and the equity market performance obviously is in stark contrast to the returns you would get from cash. So I think all that together is making some investors think about being fully invested as they look to the year ahead.
Good. And then, we talk a lot about the US. The US is the largest stock market overall, but you mentioned a little bit around US earnings, and we're going through earnings season right now. So that's where US companies report their quarterly results, so revenue, earnings, forward guidance, etc. Just any sort of thoughts around what you're seeing there?
Well, it's been a mixed picture so far. Market expectations for this quarter weren't particularly strong, nor are they that strong for the quarter ahead. It's been mixed and there's been some misses, but the equity market has taken it quite well and has been more willing to just push out expectations for full year earnings a little bit into 2025. So even at this early stage in this year, equity markets are already looking through to the year ahead. And one of the reasons for that constructive reaction, we think, is because of the disinflationary impulse and the idea that rate cuts are going to come sometime from the spring.
Excellent. And just maybe from a sector perspective, a lot of the Magnificent Seven, if you want to call them that. We've seen some pretty decent earnings reports coming from some of them.
Yeah. So the big beats have come from these tech and communications names. We've seen some broader performance, say from healthcare sectors, utilities, other sectors such as financials have had one-off hits to earnings provisions due to regulatory changes, etc. But on the whole, it's been an okay start to the year, but market consensus for the rest of the year is very strong, and the growth tailwind from that is very supportive.
Good. And then maybe just the final point for me is just, a little bit around China. And it feels like China's in quite a different place compared to developed markets overall.
Total opposite, yeah.
Just some thoughts around how you're thinking there?
Well, we know the West has suffered from an inflation impulse.
Yeah.
China is now dealing with a deflation impulse. That is, inflation is falling, is negative, and it's very broad. So it's not just food prices, but it's also in sectors like transport in the consumer price basket. And other sectors within consumer prices are actually experiencing inflation close to zero. It's got a very broad, low inflation impulse, and also industry has that as well. So producer price inflation is negative, and all sectors who contribute to that measure are experiencing price declines. Now that's actually constructive for us in the West, because it's said that China exports deflation when prices are falling. So it may actually be a good impulse for further price pressures downwards in the rest of the world. But it does show that China is struggling to deal with the deflationary bust following the pop in the residential property bubble 2 years ago, and they just don't have many of the fiscal levers that Western economies have, such as quantitative easing or even the ability to take interest rates down to zero. China has to maintain a relatively higher level of interest rates to prop up the currency. So a number of headwinds that we haven't had to face in the West.
Excellent. Thank you, Kevin. I think that was a great summary of the week. As always, please do like and subscribe to our True Potential YouTube channel. Next week, we will have our daily morning markets every single morning. And as well as that, we'll also have our weekly morning market. So that weekly summary that comes out at the end of the week. Enjoy your weekend.